So today we are going to talk about one of the most underrated factors in trading, and that is bet size or betting size. So basically trading is nothing but just taking low risk high reward trades which have a high probability of success. So if you keep doing that over a period of time, you will be a profitable trader. Of course, this is all just theoretically said. There are a lot of factors that hamper it, but the basic premise is you have to bet more when you have a high probability of success, and we have to bet less when you have a low probability of success. Now here I have taken some example setups where we can see how risk per trade should be ideally established. So basically we have four kind of trades here, individual trades and setups rather, and one setup has a probability of 70% success, other setup has probability of 30% success, another one has 80%, another one is 60%. So in the first scenario, this is the first scenario, first four rows, we take risk per trade of 100 rupees each. So for every one of these setups we take 100 rupees trade. It doesn't matter if this has a more probability of success or this has a less probability of success. We take the same risk for each trade, and to keep calculation simple, we have kept the risk reward to 1:1. So for 100 rupees risk you will be getting 100% reward target price. So the expected outcome is nothing but just the multiplication of these two, which is 70. Just bear with me for this. This is the a little complicated part. Basically you have to multiply probability with risk per trade. So if with this probability of success, with this system, if we take 10 trades, now we will consider 10 trades for each of these systems. So if we take 10 trades of this first system, 7 of them should be statistically profitable and 3 of them should be a loss trades statistically. So basically 7 will be profitable and 3 will be loss making trades. Now given a risk per trade of 100 rupees and a risk reward ratio of 1:1, our reward will also be 100 rupees. So for 7 profitable trades, we will be making 100 rupees per trade profit. So the total gross profit for this will be 700 rupees. Similarly, we will be having 3 loss making trades. So those 3 losses will account for 100 into 3, which is equal to 300 rupees. So if we take 10 trades with this system where the probability of success is 70% and the risk reward is 1:1, we will end up making 700 minus 300, which is equal to 400 rupees of profit after taking 10 trades. Similarly, when we have a low probability of success system, if the probability of success is 30%, then 3 trades will out of 10 will be profitable and 7 will be loss making. Accordingly, we will have 300 rupees of gross profit and 700 rupees of loss. So net this system loses 400 rupees. Similarly, for probability of success of 80% for your system, if 8 out of 10 trades are profitable, you will be making 8 into 100, which is equal to 800 rupees of gross profit, and 2 trades will be loss making. So 2 into 100, that is your risk, you will be losing 200 rupees. So the net profit after these two will be 600 rupees. Similarly, for 60% probability of success, 6 will be profitable trades, 4 will be loss making trades out of 10 trades, and you will be making 600 rupees profit on these profitable trades and 400 rupees loss on this loss making trades. So your net expectancy will be 200 rupees. Now if you take 10 trades of each of these and add them together, you will be making 800 rupees in 40 trades, because you are taking 10 trades for each. So in 40 trades you will be making 800 rupees. That comes out to be 20 rupees per trade you are making profit. This will be your profit for each trade, expected profit. Now let's see what happens when we increase or dynamically change our risk per trade. So logically what we should we do the trade setups where the probability of success is very high, for example 80% or 70%. So in this case where you know that there are high chances of your trade getting profitable, you should be betting more money. So here I have changed it according to, so for low probability trades I have kept the risk per trade as 100 only, But for high probability trades where the probability of success is in our favor, for the given risk reward, I have increased the bet size. So for 60% probability of success, I have given 200 rupees per trade risk. For 70% probability of success, I have given 300 rupees per trade risk. And for 80% probability of success, I have increased it even more, because we want to bet the highest amount of money where we know that the probability of success is the highest. So that's why I have bet 400 rupees per trade for this. So in that case, the expected outcome again will be the multiplication of all these two parameters. So 300 into 7 will be 210. This will be 30 only, because probability of success is low and we have bet less. So basically we are losing less when we have low probability of success, and we are making more when we have high probability of success. 400 into 8 is 0.8 is 320, and 200 into 0.6 is 120. So basically if we take 10 trades for each of these systems, again the number of profitable and loss trades will be same. So for this system we had 7 profitable, 3 loss. Again for this system we will be having 7 profitable and 3 loss making trades. But what you can see is the profit that you will be making is a lot larger than the loss you will be making. Of course your loss is also increasing because you are taking more risk per trade. So don't confuse that. You are, instead of taking 100 rupees per trade risk, you are taking 300 rupees per trade. So one of those trades, if the stop loss get hit, then of course you are going to lose more money in this case. But we have to think about this not on a trade to trade basis, but on the overall picture. We have to see the average of 10 or 100 trades. So with this trade setup for 70% trade success, if you take 10 trades, 7 of them will be profitable, 3 of them will be loss making. The profitable trades will be making, since the risk to reward ratio is 1:1, we will be making the same reward as this risk. So we will be making 300 profit or loss depending on the outcome. So for 7 profitable trades, that will be 7 into 300, that is 2100 gross profit. And the loss making trades, we will lose 300 per trade. So there are 3 such trades. So we will be making 2100 profit gross, 900 gross loss. So net will be 1200 profit. Similarly is the case for this. Since the probability of success of these setups is low, we are betting only the original 100 rupees on this. And in that case, we will be similarly losing 400 rupees. 300 rupees we will be making on 3 profitable trades, and 700 rupees we will be losing on loss making trades. So net we will be losing 400 only, like the previous scenario. In the next scenario, we have 80% probability of success. These setups are the most important setups in your trading system. So we want to bet the highest on these setups. So here risk per trade is more, because you want to bet higher, you take more risk and you take a bigger position size and you risk more money on this. So statistically 8 out of 10 trades will be profitable and 2 out of 10 trades will be loss making. So each trade will fetch you 400 rupees. So 400 into 8 will be 3200 rupees, and each loss will fetch you 400 rupees. 400 into 2 is 800 rupees loss. So the net profit will be 3200 minus 800, which is equal to 2400. So you will be making a lot of money for these setups. So 2400. And similarly for 60% probability of success, this is not a spectacular probability of success. So I've kept a bet size reasonable to 200. And you will have 6 profitable trades, 4 loss making trades, and correspondingly 6 trades will have 200 profit per trade, that will be 1200 gross profit, and 200 loss per trade. For 4 trades will be 800 gross loss. So the net will be for 1200 minus 800, which is equal to 400. So at the end of 40 trades, here you will be making 800 rupees and here you will be making 3600 rupees. So for 40 trades, this comes out to be 90 per trade. For 360 divided by 40 is 90 for 90. So you can see the difference. The strategy is the same. You are having the same setups. 7386, 70% probability, 30% probability, 80% and 60%. Here also the same. So your trading system is the same, but in this case you are making only 20 rupees per trade as profit, and here you are making 90 rupees per trade as profit. So just by risking different amounts in this setup, you are exploiting your probability of success to get the maximum output. So that is what you should be trying to inculcate in your trading behavior. You have to increase the bet size when the conditions are in your favor, and you have to reduce the bet size when the conditions are not in your favor. It is even okay if you don't take these type of trades. You can only focus on these kind of setups with high probability of success, and you can make comfortable money just trading these two kind of setups. But the underlying point is, when you have good probability of success in your setups, the ideal thing to do is to risk more per trade, and on low probability of setups you have to risk less per trade. So just by adjusting your risk per trade according to the probability, you are making a staggering difference. So this is basically more than 4 times. So for the same setups, you are making different profits for different bet sizes. So this is the takeaway point, and please try to inculcate this behavior in your trading system, so that whenever you are making profitable trades, or whenever you have a high conviction, try to have more risk per trade so that your overall profitability can be increased. Thanks.